Good morning. I'm Fred Kempe, President and CEO of the Atlantic Council, and it is a pleasure to welcome you to today's conversation hosted by the Atlantic Council's Geoeconomic Center in partnership with the International Monetary Fund. This morning marks the launch of the IMF's new paper, which dives into the inner workings of central bank digital currencies in 6 countries and currency unions, and that includes China, Sweden, Uruguay, Canada, the Bahamas, and the Eastern Caribbean Currency Union. Both the event and the IMF's paper could not be more timely or more significant. Last month, the U.S. Federal Reserve announced its intention to explore the creation of a central bank-backed digital dollar. Last week, India surprised many with their plans to have a digital rupee online by 2023. So truly, the race for the future of money is underway. The Atlantic Council's Geoeconomic Center, under the leadership of Director Josh Lipsky, has been at the forefront of this issue. As cited in this new IMF report, the center's flagship Central Bank Digital Currency Tracker reveals that 91 countries, representing 90% of global GDP, are exploring issuing their own digital currency. The center's research, writing, and testimony to Congress have helped galvanize action both in the U.S. and abroad. In short, this is important work, and this is an important day in that work. And to mark the occasion, we are honored to welcome back to the Atlantic Council Kristalina Georgieva, the Managing Director of the IMF. Ms. Georgieva is a distinguished public servant and leader. She was previously the CEO of the World Bank and Vice President of the European Commission. She has served as the Managing Director of the IMF since October 2019, and in this role has steered the IMF through COVID-19's enormous economic challenges. Managing Director Georgieva was awarded the Atlantic Council's Distinguished Leadership Award in 2020, our highest honor. Ms. Georgieva, welcome back. After the Managing Director's remarks, Alice Fulwood, finance correspondent for The Economist, will lead a discussion with senior representatives from the IMF and central banks featured in the report. And to conclude, Geoeconomic Center Director Josh Lipsky will outline the ambitious plans ahead for the Atlantic Council's digital currency work. But first, Managing Director Georgieva, Kristalina, the floor is yours.
Thank you very much, dear Fred, for the introduction. And many thanks to the Atlantic Council for providing a fitting venue to discuss central banks' forays into digital currencies. Since the founding of the Atlantic Council in 1961, it has made important contributions to strategic political and economic policy debates. Those debates have served us well, helping us to test the boundaries of our thinking and be better prepared for what lies ahead. So today we aim to test our thinking again. We have moved beyond conceptual discussions of CBDCs, and we are now in the phase of experimentation. Central banks are rolling up their sleeves and familiarizing themselves with the bits and bytes of digital money. These are still early days for CBDCs. We don't quite know how far, how fast they will go, but what we know is that central banks are building capacity to harness new technologies to be ready for what may lie ahead. If CBDCs are designed prudently, they can potentially offer more resilience, more safety, greater availability, and lower costs than private forms of digital money. That is clearly the case when compared to unbacked crypto assets that are inherently volatile. And even the better managed and regulated stablecoins may not be quite a match against a stable and well-designed central bank digital currency. We know that the move towards CBDCs is gaining momentum. President Kempe was very clear on that. It is driven by the ingenuity of central banks. All told, around 100 countries are exploring CBDCs at one level or another. Some researching, some testing, and a few already distributing CBDCs to the public. In the Bahamas, the sand dollar, the local CBDC, has been in circulation for more than a year. Sweden's Riksbank has developed a proof of concept, and it is exploring the technology and policy implications of CBDCs. In China, the digital renminbi called e-CNY continues to progress with more than 100 million individual users and billions of yuans in transactions. And as we heard from Fred, just last month, the Federal Reserve issued a report on CBDCs, and it noted that a CBDC could fundamentally change the structure of the US financial system. As you might expect, the IMF is deeply involved in this issue, including through providing technical assistance to many members. An important role for the fund is to promote exchange of experience and support the interoperability of CBDCs. As part of the service to our members, today we are publishing a paper that shines a spotlight on the experiences of 6 central banks at the frontier, including China and Sweden, to be covered in the panel discussion following my remarks. We take away 3 common lessons from these central banks from which others may benefit. Lesson number 1, no one size fits all. There is no universal case for CBDCs because each economy is different. In some cases, a CBDC may be an important path to financial inclusion. For instance, when geography is an obstacle to physical banking. In others, a CBDC could provide an essential backup in the event that other payment instruments fail. One such case was when the Eastern Caribbean Central Bank extended its CBDC pilot to areas struck by a volcanic eruption last year. So central banks should tailor plans to their specific circumstances and needs. Lesson number 2, financial stability and privacy considerations are paramount to the design of CBDCs. Central banks are committed to minimizing the impact of CBDCs on financial intermediation and credit provision, very important for the wheels of the economy to run smoothly. The countries we studied offer CBDCs that are not interest-bearing, which makes a CBDC useful, but not as attractive as a vehicle for savings as traditional bank deposits. We also saw in all 3 active CBDC projects in the Bahamas, China, and Eastern Caribbean Currency Union that they placed limits on holdings of CBDCs, again, to prevent sudden outflows of bank deposits into CBDC. Limits on holdings of CBDCs also helps meet people's desire for privacy while guarding against illicit financial flows. Smaller holdings are allowed without the need for full identification if the risks of money laundering and terrorist financing are low. This could be a boon for financial inclusion at the same time. But larger transactions and holdings require more stringent checks, as you would expect if you deposit a bag of cash at the bank. In many countries, privacy concerns are a potential deal breaker when it comes to CBDC legislation and adoption. So it is vital that policymakers get the mix right. And that brings me to lesson number 3, balance. Introducing a CBDC is about finding the delicate balance between developments on the design front and on the policy front. Getting the design right calls for time and resources and continuous learning from experience, including shared experience across countries. And in many cases, this would require close partnerships with private firms to successfully distribute CBDCs, build e-wallets, add features, push the bounds of technology. But the policy aspects are also paramount, including developing new legal frameworks, new regulations, new case law. On both fronts, CBDC also requires prudent planning to satisfy policy targets like financial inclusion and avoid at the same time undesirable spillovers such as sudden capital outflows that could undermine financial stability. Taken together, careful design and policy considerations will underpin trust in CBDCs. But let's not forget that trust must be anchored in credible central bank with history of delivering on its mandate. Introducing a CBDC is no substitute for this underlying trust built over decades, a public good that allows money to grease the wheels of our economies. The success of a CBDC, if and when issued, will depend on sufficient trust. And in turn, any successful CBDC should continue to build trust in central banks. So let me conclude. As we heard from President Kempe, the history of money is entering a new chapter. Countries are seeking to preserve key aspects of their traditional monetary and financial systems while experimenting with new digital forms of money. The paper we are releasing today shows that for those experiments to succeed, policymakers need to deal with many open questions, technical obstacles, policy trade-offs. It may not be easy or straightforward, but I'm confident that the bright minds in central banks can succeed thanks to their trademark resourcefulness and perseverance. Fittingly, even the great inventor Thomas Edison acknowledged that there is no substitute for hard work. And this is what we embrace at the IMF. This hard work has already advanced. We are supporting countries in their CBDC experiments to understand big picture trade-offs, to provide technical assistance, to serve as a transmission line of learning and best practice across all our 190 members. And we are stepping up collaboration with other institutions, such as the Bank for International Settlements, at par with the rapidly growing significance of digital money. Today's discussion is only the beginning of an exciting journey, and we have a great panel to take us further on it. Thank you.
Thank you very much, Kristalina, for those remarks. I found them very insightful, and you have very beautifully summarized the paper. I do encourage everyone watching to take a look at it as well. It is my great pleasure now to introduce our panelists. I am delighted to be joined by Mr. Mu Changchun. He is the Director General of the Digital Currency Institute of the People's Bank of China. Welcome, Mr. Mu. I'm also thrilled to be joined by Mr. Tobias Adrian, the Financial Counselor and Director for the IMF's Monetary and Capital Markets Department. Hello, Tobias.
Hello.
And finally, by Ms. Gabriela Guibourg, who is the Head of Analysis and Policy at Sweden's Riksbank. Hi, Gabriela.
Hello.
My name is Alice Fulwood. I write about Wall Street for The Economist, and I will be moderating today's discussion. We have just under an hour to talk about the paper with our three panelists. Please feel free to ask questions using the Q&A function, and I will try to get some of those at the end. One of the things that fell out of Kristalina's remarks for me was this idea that we've moved from the innovation stage into the experimentation phase. And I guess, the most urgent question to me, it seems, as a journalist, is how close we are to CBDCs really becoming a reality that lots of people are using in their everyday lives. Dozens of countries around the world have begun experimenting with these, as you should be able to see using the Atlantic Council's tracker. So I would like to give our panelists a chance to give me a sense of how far they think we are from making CBDCs a reality, and what stage their pilots are in. Could I first go to Mr. Mu?
Thank you, Alice. Thank you for having me here today. The reason why our CBDC project is still running its pilot phase currently. ECNY pilots have been running in 11 areas, including Shenzhen, Suzhou, Jiu'an, Chengdu, Shanghai, Hainan, Changsha, Xi'an, Qingdao, Dalian, and 2022 Beijing Winter Olympics venues. There will be more cities that join ECNY pilot soon. By now, 9 private authorized operators have joined the ECNY system, including the ICBC, ABC, Bank of China BOC, CCB, Bank of Communications, Postal Saving Banks of China, China Merchants Bank, as well as Alipay and Tenpay in the name of their commercial banks arm. With the pilot going on, there will be more qualified private sector operators joining the ECNY system. By October 8th of 2021, there were over 123 million ECNY wallets registered, with individuals and around 9.2 million wallets held by corporate firms. And it's accepted in more than 1.3 million merchants in pilot areas. And we actually feel obliged to start our CBDC due to the following motivations. First, to improve the efficiency of the central bank payment system. In recent years, we have witnessed a trend that a lot of central banks are improving their payment systems by building up faster payment systems, which will widen the access and include more participants from different sectors. The ECNY project is one of our efforts to improve the efficiency of the central bank payment system. We provide 724 services to the general public, which will greatly extend the service hours. In addition, our system realizes higher efficiency with the feature of settlement upon payment. Furthermore, we strengthened the ECNY capability. For now, we can support 10,000 TPS. Last but not least, ECNY joins hands with more participants from different sectors, including not only commercial banks and financial market infrastructures, but also PSPs, fintech companies, telecom operators, and so on. With the efforts, we managed to increase the efficiency of the central bank payment system. Secondly, in order to provide a backup or redundancy for the retail payment system, we build up this ECNY payment system. As you may know that Alipay and Tenpay seem to have already become significantly important financial infrastructure. If anything bad happened to them, either financially or technically, that will be, will bring very significant negative impact to the financial system. It's the case when Alipay and Tenpay are not allowed inside the Winter Olympics venues due to the business privilege of the Olympic sponsors, because Visa is the only one who can provide the mobile payment services inside of the Olympics venues. But since eCNY has the legal tender status, it's no doubt available in the Winter Olympic venues, and further offers various kinds of wallets for the audience and all athletes to take a dip into the convenience of mobile payments in China. It is the same in other pilot cities when eCNY can offer a backup in extreme scenarios like connectivity and a power shortage. Last but not least, to improve the financial inclusion. The private sector provides financial services that cover 80% of the population, while remaining 10 to 20% are disadvantaged in their access to the basic banking services. In addition, as mobile payments are so prevalent in China, short-term foreign visitors and the non-residents may also have difficulties in making payments in China because most of the merchants don't accept the cash, paper notes, credit cards, or debit cards. So it will be the obligation or responsibility for the central bank to cover those long-tail users. First, as eCNY is loosely coupled with bank account system, digital wallets could be opened without the support of a traditional banking account system. On one hand, the disadvantaged people can enjoy the basic financial services. On the other hand, the short-term foreign visitors and the non-residents can enjoy the mobile payment system in China. Moreover, eCNY charge no fee from the authorized arbiters and the individual users. It will reduce the burden of the real economy and improve the business environment. I will stop here. Back to you, Alice.
Thank you for that. That was very helpful in clarifying, where you're at with your CBDC and what your goals are. Can I put a similar question to Gabriela? The Riksbank was also sort of at the forefront of exploring CBDCs, but it hasn't yet quite launched a pilot. What's holding you back? How do you anticipate sort of proceeding with your CBDC soon? And what goals are you hopeful to achieve with a CBDC?
Well, let's start with the background, why we were. Thank you, Alice, for the question. Let me start with the background, why we were at the forefront. It's not that we were wiser than other central banks. It's more like the future, as Mrs. Georgieva was talking about, came to us a little bit earlier. We became fully digitalized, almost fully digitalized, very early. Cash almost disappeared, was completely marginalized in Sweden in the last 10 years. So then, as a central bank, with our role of providing the population with central bank currency, we began to think, well, is the people abandoning cash because they don't feel that they need the trust given by the central bank in providing the unit of account, the currency? Or is it that the technology is not really fit for purpose in this new digital environment? Sweden is a very digitalized country, as I said before. And for example, we even have our transactions and activities with authorities digitally nowadays. So the answer to that question, we began to think about the what. What do we need to do and how? So we did a lot of policy analysis on what the central bank digital currency would look like at a very, very high conceptual level, and what the policy implications in terms of the central bank's other mandates on monetary policy and financial stability could possibly be. But we understood also very early on that this decision, the decision of launching a central bank digital currency, was something that was a very, very big step. A step that could not be, a decision at least, that could not be taken by the central bank by itself or alone. It needed to have a broad discussion with stakeholders and with national authorities and with politicians. We needed to get the support of the whole society in order to do that. So we asked the parliament, the Swedish parliament, to start an inquiry. An inquiry was broad. It was not only about whether the Riksbank should launch or not a CBDC, but also what is the state, or what is the role of the state vis-a-vis the private sector in the payments market, in a completely or a very, very exceedingly digitalized society. And within that broad scope, whether the Riksbank should be allowed to issue a CBDC. And in that case, what the legal status of the CBDC would be, legal tender or what. This inquiry started at the end of 2020, and we are expecting the result. In simplifying the whole thing, we are expecting whether we have the green light or not. And we expect the result from this inquiry in November this year. But at the same time, we are not sitting with crossed arms waiting for the result, but we continue working. And it's not that we have gone from the conceptual level to the experimental level. We are doing both because there is a need of an interaction between the policy analysis and the lessons that we draw from learning from technology and the other way around. So the pilot that you mentioned, we do have a pilot, and it started in 2020. The pilot is by no means a blueprint for how potentially Krona, that's the name for our CBDC, would look like. The pilot is a pilot with Accenture, and it's a DLT-based model. In the beginning was a proof of concept with demos for user tools and so on. The second phase of the pilot integrated some stakeholders, one bank, one big bank, and one fintech company, and also some point of sale interaction. And in that second phase, we also looked into some issues of offline, for example. And now we are starting to think, this is, as I said, this pilot is not, if we decide that we're going to launch an e-Krona, given that we have the political support to do so, we are not going to say, well, then we continue with this pilot with Accenture. This pilot was for us to learn, draw lessons from the technology used. At the same time that we continue with the policy analysis and see what can the technology provide, what is not there in terms of resilience, in terms of, for example, like offline capabilities, in terms of scalability, efficiency. So when we go further during this year, we need to decide more on the details of the requirements for the tender that is needed in case we decide to launch an e-Krona. So we are going to go to the blueprint, the design this year. And very much, and very important here, is the international work that we are doing. We are working very much in cooperation with other central banks, as you very well know, in the G7 central bank group with the BIS. We have been working with the G7 last year on this subject. And we are also working in a very, very, very important aspect of cross-border capabilities of CBDC within the roadmap by the G20. And under the chair in this group is Ms. Cecilia Skingsley, who is the first deputy governor of the Riksbank. And we need to have all these pieces to make the puzzle. What are other central banks or the central bank community converging into in terms of what is needed? What are we thinking ourselves? and what lessons are we drawing from the foreign pilots before we go ahead. And most importantly of all, we need the go-ahead. So as a journalist, I expect that you want me to give you a year, but you won't have a scope from me. I cannot say, but at least this year we are going to have the answer from the politicians, and then we will know.
Well, that's definitive enough for me for now. I won't ask you to pin down an exact year that you'll launch. Moving on to Tobias, you get to look at all different kinds of countries, pilot projects, and all kinds of goals. Could you, and all the goals that they're attempting to achieve with those CBDCs. Is there sort of a commonality that you think is driving most people? You heard sort of Gabriela and Mr. Mu talk about the sort of digitization of payments. And how far do you think we are from people really thinking that CBDCs are a technology that we're actually using, and we've sort of moved beyond that experimentation phase?
Yeah, thanks so much, Alice. As Kristalina Georgieva mentioned at the beginning, there are now over 100 countries around the world that are either studying CBDCs or have introduced CBDCs. In fact, there are 2 countries in the world right now that have launched their CBDCs. One is the Bahamas. The Bahamas was the very first country in the world to launch a CBDC, and the other one is Nigeria that launched just last year. But as I mentioned, there are over 100 countries that are exploring or experimenting with CBDCs. The paper that we are launching today, that was led by an IMF economist, Gabriel Soderberg, is looking specifically at 6 countries, including China and Sweden, that we just heard from, but also the Bahamas, which I just mentioned, the Eastern Caribbean Currency Union, ECCB, as well as Canada and Uruguay. And so let me share a little bit the motivations of those various countries. I think the prime motivation at the moment is the technological change that we are seeing in payment space. There are new technologies, and those provide opportunities for countries to run more efficient payment systems. So this is the deep cause why it's happening at the moment. And clearly in the world around us, we're seeing a lot of innovation in the financial sector, which is broadly called fintech. And so countries are aiming to increase efficiency in the payment system. Of course, as was mentioned already, trust is at the root of any payment system. So having a payment system that is trustworthy and having a CBDC that is trustworthy is the prime goal of everybody. So you want it to be more efficient, but you want it to be trustworthy. And so what does that mean? It has to be resilient. It has to be resilient against many risks. And here, the Bahamas and the ECCB are particularly interesting because, of course, these are countries that are islands in the Caribbean that are often hit by hurricanes. And during those times, cash distribution is extremely difficult. So one of the motivations that is specific to island countries is to be resilient relative to hurricanes in terms of cash distribution. But of course, there are many other arguments, such as Gabriela, who mentioned that the cash usage in Sweden declined dramatically, and we see similar trends in many other countries. So everybody is moving to a digital world, and it's very natural for the central bank to also move to be digital. And of course, another important motivation is financial inclusion and access. In too many countries around the world, we continue to see a fraction of the population that doesn't have access to financial services, that doesn't have access to electronic payments, or if it has access, those might be very expensive. And so CBDCs can provide more inclusion and more access to a broader segment of the population. You do need to have a cell phone, or at least you need to know somebody that has a cell phone in order to participate. But that is a very, very large fraction of the population. And then lastly, I would say that, as economists, we believe in competition. And a CBDC, of course, also increases competition in payment space. And if it's well designed, it's both resilient and competitive so that efficiency is increased. So I think those are broadly the motivations that are shared across countries, with, of course, some differentiation across countries as to what is the prime objective relative in one country relative to another.
Thank you. No, that's very clarifying. I'd like to just quickly follow up with Changchun on what it is that the People's Bank of China would consider a success relative to the goals that you've laid out. So you already say you have 123 million people using the ECNY. That's about sort of 10% of the population. What kind of coverage would you need to feel like you've been successful in the goals of protecting your monetary system from potential failure of one of the payments giants and those financial inclusion goals? I think you might be on mute, by the way.
Sorry. Thank you, Alice. Well, actually, the ECNY trials have been running very smoothly with increased acceptance by the general public. Because we adopted various kind of marketing campaigns like wrap packets and lower carbon engagement, which have greatly encouraged citizens to use ECNY. Just to give you a rough idea that just in the event held by Meituan, which is a O2O platform, they offer ECNY wrap packets to encourage users to ride bikes and to take public transportation and to reduce carbon emission. There are already more than 9 million users registered in that event. And it's also the same in other events, and it's definitely beyond our expectations. But we actually seek to maintain a level playing field and build an ecosystem for ECNY, not to reduce the usage of existing payment vehicles, payment digital wallets, such as Alipay and Kempe. So firstly, the usage of ECNY does not threaten the market share of Alipay and Kempe. The two firms, as I mentioned in the last question, have already joined the ECNY ecosystem at the second tier authorized arbiters. And now users could use Scan to pay on Kempe to make ECNY payments, and that still be their own market share. So their market share will not be reduced, and we would not be negatively impacted. Furthermore, Alipay and Kempe works as a wallet, and the ECNY works as the currency or the payment instruments. So we'll provide new cases for user cases for them, which will help them to innovate their business. While in the long run, it will be a market-driven horse race. Commercial banks or traditional incumbent financial institutions will have a new start, given that they could provide better services with ECNY than before. Then they can get back some market share from Alipay and Kempe. So as to also, so there's no one main goal for us to achieve to safeguard or diversify the payments, because Alipay and Kempe, or you call it WePay, they are already in the ecosystem. So in terms of monetary sovereignty, as I mentioned above, is the mandate of the central bank to ensure the public direct access to the central bank money. Our pilots have already enabled the general public to have a wider and steady access to the fiat currency, thus to help realize that goal. So, that goals are already achieved with the trials. Back to you, Alice.
Thank you. That's very helpful. Just very quickly, you have your own app as well as interoperating with WePay and Alipay, right? So, do you want your own app to become the one that people use with the CBDC, or do you not really mind either way?
Actually, we don't mind, because the market position of our app is not to compete with Alipay and Kempe. It's only a management software. People to use that app to manage the or configure their payment instruments. Like they can manage the caps in different use cases. For example, to prevent any tele-fraud, they can reduce the cap or the limit in one use cases, and uplift in another use cases. The goal of that app is to manage or make configurations of their payments instruments. It's not to compete with all those market players. So in the end, or in the long run, I mean, this app will actually go back to the stage, to the backstage, instead of being the players in the field.
Yes, thank you for clarifying on that point. Okay, we've talked a little bit about goals and where all of you are at with your pilots and experimentation phases. Now we get to move on to some of the risks associated with rolling out these CBDCs. Can I go to Tobias first? In the IMF report, as Kristalina laid out, a lot of the CBDCs that have been launched have caps on balances and also don't pay interest. And those are sort of defensive features to prevent undermining the sort of bank deposit system in a lot of countries. Could you just explain how important that is? And, is that the biggest risk associated with CBDCs? Do you think those design features solve it?
Yes and yes. So I think this is certainly a significant risk that central banks are considering very carefully. So the credit intermediation by the banking system is vital for economies to grow. And of course, banks take deposits that are then transformed into loans to corporates and households. And so by introducing a CBDC, you don't want a significant drainage of deposits out of the banks into the CBDC. There will be some of that, but it has to be within bounds. And so there are really three risks that central banks are concerned about. So the first one is that there is sort of like a structural shift away from bank deposits into CBDCs, and what the magnitude of that shift is. And so offering zero interest rates, or perhaps in the euro area or some countries with negative interest rates, these might even be negative interest rates on the CBDC, that make holding CBDC relatively unattractive to deposits, because of course commercial banks can offer interest rates on their deposits. And so that should contain the structural shift of liabilities out of the banking system. A second concern is bank runs, right? So if there's a confidence crisis, and in particular if there's a crisis in the confidence of banks, there could be a sudden outflow from banking liabilities into CBDCs, because CBDCs, of course, are the liability of the central bank. So they would be considered as being very trustworthy. And so this is why many countries are imposing limits on how much CBDC any individual can own, or how big the transactions can be. There are different design features in different countries. And then the third risk is particularly for emerging markets, and developing economies, that there could be a flight from domestic currency into foreign CBDC, because so that's a kind of like form of electronic dollarization, right? So dollarization has always been a struggle for countries that are viewed as being unstable. But of course, once you go to a fully digital world, that kind of dollarization or cryptoization or CBDization could be that much quicker and more dangerous. So that's a third consideration. And here, the only tools that policymakers have are very dramatic. So these are capital flow measures. So these are measures to basically contain the degree to which you can take money into foreign CBDCs. So let me stop here and turn back to Alice.
Yes, no, that was all. I mean, I was going to say clarifying, but also scary. All of the risks you described. Gabriela, could you tell me sort of which of those sort of most concerns the Riksbank, and do you take heart in the findings of the paper that suggest that there are technical solutions to some of those issues?
Well, yes, those that Tobias was talking about, of course, are one of the main risks, and he described them very, very, very well. And we have been analyzing those risks from the beginning, and we continue to do so. The jury is still out in terms of design. What type of control mechanisms are needed, whether quantity limits or pricing, interest rates. Something will be needed. That's my opinion. Let me clarify, this is not the Riksbank official point of view, because we don't have an official point of view as yet. But I am the one leading the policy analysis and participated in the international work. But it's not the Riksbank official point of view. So of course, those are important risks. And we have analyzed those risks also in the international cooperation sphere. At the end of last year, I don't remember, it was October or November, the group of 7 central banks and the BIS published 3 reports. One of those was on financial stability aspects of CBDCs. And I think the report is very readable and interesting. And we continue within the Riksbank to analyze different scenarios of demand for CBDCs in normal times and bank runs, and what kind of mechanisms we need to have in place, and also what kind of collateral the Riksbank would need to have or accept in order to be able to contain a crisis scenario with a lack of confidence in the bank system and a very large flow of CBDCs to the Riksbank, whether the Riksbank should have to lend the banks. So we are analyzing all these aspects. But the conclusion of the report that I mentioned is that those risks are there and they have to be taken seriously and analyzed very carefully in every jurisdiction, but they are manageable. And I think that's really the Riksbank's position right now. Another risk that we see that haven't been mentioned, and this is in particular for jurisdictions that already have very advanced and very efficient payment systems, like Sweden and the Nordics in general. And the payment market is, as you know, a payment with large network effects and economies of scale, and where we have large incumbents. So there is also a risk of for the Riksbank or a central bank to launch and to fail. And that would not be a desirable outcome. So we need also to see that there are user cases for the CBDC. We have to have consultations and discussions with all the stakeholders, as most central banks already have converged to the idea that we are not going to have a centralized model where the central bank would do everything, but we would have a two-tiered model where the central bank would provide kind of the platform on which payment service providers would connect to payment service providers themselves, offer service and innovate and compete with each other. But in that case, we also need to have incentives for payment service providers to adopt and want to the CBDC platform and to want to provide services to end users. So there is a very delicate balance here between having something that is too large and that can be dangerous for the financial system and something that really does not take up. So this is complicated, and if we are not moving forward fast enough, it's because we need to consider all these aspects before we launch.
Yes, I totally understand. That makes sense. Can I ask, Changchun, China is one of the countries that has launched its pilot CBDC with a quantitative restriction. So there's a total cap on the balances that you can hold. Do you think it's sort of feasible for those caps to always be maintained? You know, if there were a bank run or some kind of financial crisis and the Chinese public were clamoring to hold more balances in the CBDC wallets, do you think it would be politically feasible for those restrictions to be maintained?
Thank you, Alice. I think the answer, a simple answer to those questions will be yes. The ECNY will not have any material impact, negative impact on the current financial system, and we are confident. And we don't expect in the stress scenario that will be politically, to move from to remove those caps, because firstly, the ECNY is operated under a two-tier system, as mentioned by Gabriela, that the commercial banks are still kept in the loop. And we, as Tobias have said, that we adopt the policy that we mainly position as M0 and pay no interest. We could also introduce potential fee to charge with a large amount of or frequent withdrawal from the ECNY system during the distress or stressful scenarios. And most importantly, we have the deposit insurance mechanism in place, which will protect the deposits below RMB 500,000. So for those general public, even in a distress or stressful scenario, the general public will have no incentive to move their large chunk of their deposit from the financial intermediaries or financial institutions to the ECNY system. And furthermore, in the financial crisis, like Tobias have said just now, it will be a run on the whole financial system. Will be a run on the whole sovereign monetary system instead of individual financial institutions. So to summarize, that there is no, we will not remove politically. We don't have the pressure to remove those restrictions. And just to give you a rough idea that currently with our trials, the wallet balance is only about RMB 470 million, comparing with our M0, which is RMB 8.6 trillion, M1 RMB 62.6 trillion, and M2 RMB 233.6 trillion. You can see the balance, the wallet balance of ECNY is only counted kind of very small percentage of those financial data, financial monetary supply. So I personally am very confident we can guarantee or we can safeguard those restrictions, even in a very difficult situations. Back to you, Alice.
I can see that Gabriela wishes to respond. So is there anything you'd like to add?
Yes, 2 points. Related to what Changchun was saying, sometimes, particularly the arguments coming from the incumbents, from the banks, these financial stability risks are a little bit exaggerated. We have in Sweden right now, currency in circulation to GDP is 1%. It used to be 10% 50 years ago. It's still 10% in the euro area. Assuming, which is a large number, we don't have any goal there, assuming that we would have CBDC usage corresponding to 10% of GDP, this doesn't seem to have disintermediated the banks in the euro area. In Japan, currency in circulation to GDP is 20%, something like that. So sometimes we are putting too much emphasis. This is not saying that we don't have to analyze this carefully, and of course we need to have control mechanisms in place. That's what I want to say. And also referring to the report that I mentioned earlier, the BIS and the Group of 7 Central Banks report from last year, something that we point out is that the financial system is being transformed as we speak. There are not only risks coming from CBDCs, there are risks coming from private money. As Ms. Georgieva was mentioning in the beginning of this debate, coming from stable coins and bitcoins and you name it. So there is a very, very rapid transformation in terms of digitalization, and the bank's models will have to adapt. But of course, being as we are central banks, we are going to take this in a very responsible way and a very cautious way. But the risks are already there.
I can see that Tobias wants to add something as well. And then I will go to audience questions, I promise. I can see that you've been sending them in. So Tobias, what do you want to add?
Yeah, just very quickly, I just want to concur with both Gabriela and Mu Changchun as well in pointing out that in financial crisis, in advanced economies, you typically see deposit inflows. So you don't usually see deposit outflows. You do see deposit outflows sometimes in countries with severe banking crisis. But in those countries, and these are typically emerging markets or developing economies, and in those countries, typically it's the entire macroeconomy that is destabilized. And of course, CBDC, as Gabriela just pointed out, CBDC is one way to make sure that the monetary system in the country is trustworthy. So that should actually mitigate this pressure in crisis for dollarization or cryptoization. So a priori, CBDC can actually help to lean against the macroeconomic outflow of savings. Let me turn back to Alice.
Thank you. I feel reassured by all of your answers. I'm getting a lot of questions in the chat about, that people understand that designing CBDCs and ensuring that they work as intended is a big task, but at the same time, lots of other innovation is going on: decentralized finance, Web3 innovations, stable coins, crypto, etc. Is there a sense that the ground is slipping under your feet as you try to develop these? And how do you think about how those might make it more difficult for a central bank digital currency to take hold? I'm not sure who wants to tackle that first. I think it was Oh, Tobias has put his hand up, so I'll go to him first. You go.
I'm very happy to. We have been doing a lot of work on precisely this question. So in many countries, you see, a fairly sizable shift of investments into cryptocurrencies, which as central bankers, we usually call them crypto assets because we don't want to confuse crypto assets with currencies. So crypto assets, so unbacked crypto such as Bitcoin or Ethereum is highly risky and very volatile. And it does not fulfill the criteria of money. So money is a unit of account, a store of value, and a medium of exchange. And, crypto doesn't really fulfill that because it is so volatile and it's not generally accepted and it's not that cheap to transact. So on the other hand, CBDC is a liability of the central bank. It is the legal tender in those countries that pass CBDCs usually, and it fulfills all the criteria for money. So it is a very different animal. Now, as you point out, Alice, there are backed crypto assets, which are generally called stablecoins. And some of those stablecoins do have very safe reserves. So some of them hold cash or hold deposits as reserves. So they do have fairly stable value, while other so-called stable coins are not all that stable. They actually fluctuate in value quite a bit. So there's a variance across the stable coins, but it is certainly true that stable coins are more money-like in that they're backed to some degree, at least, or sometimes fully, with cash-like backing. Now, having said that, the power of crypto and stablecoins and DeFi is DLT, right? Is distributed ledger technology, which is quite powerful. And when we look around the world, and this is documented in the paper that we're launching today, many of the pilots do use DLT technology. So they're not per se crypto assets, but they do use certain aspects of this technology. Not all do that, but many do that because it is a very parsimonious and very powerful technology to use. So at least some of these CBDCs interact quite closely with the crypto universe technologically, but there's some variance around there. But certainly you're right in pointing out that for many countries, introducing CBDC is to some degree also defensive in terms of making sure that the central bank is in control of the emerging digital money world.
Can I just follow up on that sort of question of the extent to which central banks are using distributed ledger technology? We're getting a lot of questions in the chat about whether or not China is using DLT technology. So Changchun, could you just walk us through how China has rolled its pilot out?
Well, actually, DLT is not the single technology we are using. Actually, no single technology is panacea to solve every problem. And as to DLT, in terms of the CBDC development, is actually the scalability issue, the storage issue is is kind of difficult to overcome in this system. So we do not worship any single technology. We are more practical in this sense. So we call it our strategy is long-term evolution. We borrow that idea from the telecom sector. Any technology could accommodate or could be suitable for appropriate for our CBDC system will use. And the DLT definitely is not the single answer or perfect answer to our e-CNY system. So for we have two-tier system. For the second tier, the retail transactions processing, we actually do not use DLT in that tier. And we use the centralized system for the retail transactions processing. And for the first tier, we use DLT for the reconciliation process. So, and also we borrow some ideas from the crypto assets such as the tokens, the value system, and the smart contracts. But we don't use them all actually for our whole system. We are more a hybrid system, and we are more practical in this sense. So we call it a hybrid long-term evolution system, not a DLT or DeFi system. Thank you. Back to you, Alice.
Thanks. I can see Gabriela is keen to come back on this. We're also getting lots of questions about whether Sweden is going to use DLT as well. So Gabriela, what is Sweden doing?
Thank you, Alice. I wanted to ask a clarification question to Changchun first, if I may.
Okay. Yes, go ahead.
Did I interpret you correctly, Changchun, that we will have the core of the platform provided by the People's Bank of China will be DLT based, and it will be interoperable with the payment service providers' own systems, so that they can continue to provide the end users with legacy systems. Is that the interpretation? Is that interpretation correct?
Well, I can interpret that more like a hybrid system, not a core with a DLT system. For the DLT part, we only use DLT technology in the reconciliation part for our system. That means for the reconciliation, for the error correcting, that part, all the participants or all the authorized operators, they can use the DLT to reconcile at the end of days, at the end of business days, and correct all the errors. But for the core, retail transaction processing, that part, we use a centralized system. Actually, a traditional centralized system, not a DLT system.
Thank you. And back to you, Alice. You asked what Sweden is, whether Sweden is intending to use DLT or not. Is that correct?
Yes. Is that
well, as I said before, we are complete technology agnostic. So the pilot that we have been having is DLT based, but that does not mean that we're married to DLT. We have been drawing lessons on the capabilities, efficiency enhancement possibilities, and limitations. Scalability is actually one issue. So it's not decided. And in this sense, we are also looking very closely to what other central banks are doing, because one aspect that is very important, although all central banks are coming to the CBDC from a domestic perspective, so we have to be aware of the risk of every jurisdiction having their own CBDC silo that cannot talk with CBDCs from other jurisdictions. It's very important that we have the cross-border aspect, cross-currency aspect in mind when we design our CBDC. So it's not only the domestic aspect, and it's not technology-oriented, it's policy issues that are leading the way, and technology have to provide. And it's possible, I think that what Changchun said is very reasonable, that you cannot use one technology alone, that you will have to accommodate for different technologies and also be flexible, because the future, you don't know what it awaits, and technology is changing very much. So we need to be, whatever we do, we need to have a flexible approach so we can make amends or changes as time goes by. So no decision on DLT, summarizing.
Very clear. No technology agnostic thus far, but you'll make a decision at some point. am I right in thinking the sort of main advantages for central banks of using distributed ledger technology are that they might make the sort of core system resilient? You know, say there was a tech attack on sort of one node, you wouldn't take down the entire network, and that sort of resilience is very appealing to central banks. But then the problems, I guess, are with scale. Is that the sort of general sense of the trade-offs that you're hearing? I was going to direct that to Tobias, as I believe you're plugged into many central banks.
Yes, absolutely. Very happy to answer that. So, as was pointed out for both China and Sweden, typically central banks customize technologies a lot. So, typically they would not use a DLT as it's used in Bitcoin, but what is called a permissioned blockchain. So that means that the central bank has a central node, and that it's using the powerful ledger technology, but that there's an ability of the central bank to understand who is doing what with the currency. Because, of course, one of the challenges for central banks is what is called financial integrity. So it's the usage of its currency for criminal and terrorist financing, money laundering, etc. And so typically central banks will want to have some understanding and some ability for law enforcement to come in and track who is doing what. So in a fully decentralized system, you can't do it or you can't, I mean, there are different ways of doing this. And so a permission system is typically what is being used. Now, of course, that raises privacy concerns, which is something we haven't talked about yet, right? Because as a central bank, you don't want to be able to know who is doing what in every transaction. Citizens don't like that at all. So there has to be some wall. But on the other hand, you have to do the law enforcement because you don't want your currency to suddenly be used, for things you don't want it to be used. So these are very, very stark policy trade-offs where the technology is, offering solutions to the policy, but there's no one-size-fits-all for every country. The Bahamas, which has a working digital central bank digital currency, is using DLT, as is ECCU, but many other countries are either not using it or are using some sort of variant, such as a permission blockchain. So I think I would agree that it's not the technology that should be driving the CBDC; it's the policy framework and the policy objectives that should be driving the technology, and then how that ends up depends on the country. But interoperability across borders, of course, is very important. And this work under the framework of the FSB on cross-border payments. In particular, there's one working group 19, which is about the cross-border interlinkages of CBDCs. And interoperability is extremely key to get to a global financial system and a global monetary system that is going to be smooth and interoperable while being safe. So, the complexity is very high, and that is why we see some progress, but we also see a lot of thinking all around the world, and everybody's watching everybody else to learn from, what you see out there.
Yes, we're getting a lot of questions about cross-border payments and interoperability of CBDCs. I'm going to put one quick one to Changchun first, which asks whether the PBOC is exploring an ECNY in Hong Kong in particular that might allow people who live there to get ECNY wallets. Is that something you're looking at?
Yes, but the ECNY project is carried out primarily out of domestic considerations. So we focus on the domestic retail sector because we positioned as ECNY as M0, which actually mainly used in the domestic retail market. But of course, we in response to the initiative of G20, we also explore that whole CBDC such as ECNY can be used to enhance the cross-border payments. In this process, we have exploring the possibilities with the Hong Kong MA in terms of to have interoperability with ECNY between ECNY and the fast payment system of Hong Kong to see whether we can speed up or solve the trilemma of the cross-border payment issues. But of course, in that process, we introduce the principle of no disruption, which is similar to the do no harm principle and the compliance interoperability principles in our research. For the no disruption, we think the CBDC supplied by one central bank should continue to support the healthy evolution of the international monetary system and should not disrupt other central banks' currency sovereignty and their ability to fulfill the mandate for monetary and financial stability. And the second, compliance. We have to comply with the local regulations and laws of the jurisdiction concerned, such as capital management and the foreign exchange mechanism, and also the regulatory requirements for AML and CFT. And thirdly, that is interoperability. The development of CBDC should fully tap the role of existing infrastructure and leverage the fintech so as to enable interoperability between CBDC systems of different jurisdictions, as well between CBDC system and incumbent payment systems. And the currency conversion will be processed on the virtual border between wallets. So in that case, there's no, the financial risks such as currency substitution, since the domestic CBDC should be converted to the other currencies as payments cross borders to avoid the potential adverse macroeconomic implications. So those are the principles that we adopted in the research with the Hong Kong MA about the cross-border payment services. Back to you, Alice.
I'll go to the other panelists on this as well. Do you think it's possible to build a CBDC that's interoperable with other CBDCs tech and works across borders without creating some sort of risk of currency substitution? Let's go to Gabriela first. Is that possible?
Well, this is something that we are currently analyzing within the building block 19 that Tobias was mentioning, and it's very much the IMF involved in this analysis, in the do no harm at the cross-border level. I would say that digital dollarization is mostly, dollarization in general is mostly a problem of economy that is not, well managed. But you still have the problem, and we need to have also mechanisms here. Changchun was mentioning some, in order to mitigate the risks of too large currency flows from one country to another, especially from emerging markets, for example, that are more prone to those risks. I don't have the silver bullet. This is something that is being analyzed now. But the do no harm, that is the first principle that central banks agreed on in the first report that the group of 7 central banks and the BIS published in 2020, is the first principle. And it has to also be present at the cross-border level to mitigate those risks.
Tobias, is the IMF the standard setter here for creating that cross-border linkage without risking currency substitution?
We're not the standard setter, so our articles of agreement give us certain powers, but certainly not those of a regulator. So we are working with the FSB, which is the regulatory body, in order to make sure that there is interoperability. Let me just point out that interoperability goes far beyond technology, right? So technology is one aspect, but it's really the institutional arrangement around cross-border transactions that is key here. And let me point to two different models that are possible. So one is where CBDCs in any currency can be held in any country, right? And so there you certainly have a risk of dollarization or CBDization, but that foreign CBDization. But of course, the response to that is sound macroeconomic policies, sound institutions. A country like Sweden, for example, is not too worried about being euroized or so, or dollarized, right? Because it has very sound institutions, which is not the case for all countries. There's a second model, which is very different, where foreign CBDC would have to be exchanged through intermediaries. And so you just couldn't hold the foreign CBDC in your country, and so that would require very different standards and arrangements, and so it is work in progress, as Gabriela pointed out. On dollarization, the first best is good policies in the overall institutions, the macroeconomy, etc.
Okay, I think I have time for one final question, and I'm going to put it to Changchun. Is digital dollarization something China is acutely worried about, or do you feel safe that if a dollar were introduced, it would not sort of threaten China?
Well, I think under the guidance of international setting bodies, we don't actually worry about dollarization in the future. And for example, with the support of the BIS and the IMF, and we have already developed the mBridge project, and that under that project we can have the all the central banks join in this multilateral CBDC platform that supports instant cross-border PVP in multiple currencies among multiple jurisdictions. So with that, international organizations, initiatives, for example, like Tobias said, the FSB, we're working on the building block 19 on the CBDC interoperability issues in terms of the cross-border payment services. So in that scenario, in that support of all the international setting bodies initiatives, we don't actually worry about the dollarization issue. At the same time, we have very strict. We have the capital management measures in place. In those with that measures support, we don't expect any significant impact of the dollarization impact. Back to you, Alice.
Thank you very much for that answer. And a huge thank you to all of my panelists who have joined myself, the Atlantic Council, and the IMF today. Thank you, Tobias, Gabriela, and Changchun. I thought your answers were extremely interesting. I was thrilled to be able to discuss some of those super dynamic questions with you, the idea of financial stability, cross-border currency substitution, and the idea that, economies are digitizing, economies' payment systems are digitizing all the time, and CBDCs are just one part of that. Thank you to everyone who's tuned in. I'd highly recommend that you go and look at the IMF's paper. In particular, there are 4 charts that lay out the various different decisions and choices that different central banks have made to do with the functions of CBDCs, the goals, the technology they're using, etc. And they're extremely clarifying. So thank you all. Thank you for having me as well. I'm now going to turn to Josh Lipsky, the director of the Atlantic Council Geoeconomic Center, for some concluding remarks. Thank you.
Well, thank you, Alice, for moderating that fascinating conversation. And we covered so much territory and, of course, more to cover. I want to thank Changchun, Gabriela, Guibourg, Tobias Adrian for your thoughtful insights on digital currency this morning and taking time to share with all of us. Thank you to the IMF and the Managing Director for joining us at the Atlantic Council to launch your important new paper. Now, this event was titled Behind the Scenes on Central Bank Digital Currency. And the truth is that there are many people at the Atlantic Council, at the IMF, at the Swedish Riksbank, at the People's Bank of China that work tirelessly across many time zones for weeks behind the scenes to make this event possible. So thanks to all of you. And we heard two clear messages today. The first is that over 100 countries are exploring a central bank digital currency. Think of the rapid change from just a few years ago to today. And they are learning from the innovations of the central banks represented here this morning and in the IMF's new research paper. The second thing we heard, and this is equally important, is that very few final decisions have been made. How will a CBDC work with the commercial banking system? Will it use distributed ledger technology or not? Or as we heard, maybe a hybrid? Will it be account or token-based or both? Will it interact with stablecoins and other private sector options? What about cross-border? These decisions will be made in the year and years ahead, but they will shape how the entire world uses money for the decade and decades ahead. And that is why we have made understanding this shift and this transformation a core pillar of our work at the Geoeconomic Center. Next week, we will host a 2-day conference with our partners at the University of California, San Diego on digital currency in the Asia Pacific. Next month, we will launch new research on cybersecurity and digital currency. It was brought up today, one of the most important challenges facing both policymakers and engineers in the US and around the world. Our goal is to bring voices together, to learn from one another, like I think we did this morning, and help build a financial system that is safer and faster and more inclusive, all at the same time. You can register for our events and publications at the link in the chat. Keep an eye out for everything that's coming from the Atlantic Council Geoeconomic Center. Thank you for being part of today's launch. Have a wonderful rest of the day.